Good morning. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for Tuesday, September 23rd, 2025. While the market's still digesting the fact that China bought a bunch of beans yesterday, not from the U.S., but from Argentina, a million metric tons. So that definitely puts more pressure on us. China continues to stay away from our soybeans. That's an old story, but it's the story that we're dealing with. Um, Now we've got new crop, soybeans stuff in the field. Looks like it's going to test, this $10 level. We'll see. But I think that's the biggest news is, when is this situation with China going to get straightened out? In the middle of October, the United States is going to start charging fees for Chinese vessels that dock at U.S. ports. It's going to be as large as $1.5 million per vessel. So, again, I don't know how this goes towards resolving that issue. At the end of the day, for decades, China took 25% of our soybeans, and we'll have to see if we can get that, back online. That's really what it comes down to. I have no idea. Nobody knows. There's two people that know. That's President Trump and President Xi. Overnight prices, let's see, 18 and three quarters to 22 and a half, a 4 cent trading range in corn. It's nice to see corn holding above 420, but I think everybody's worried if 420 fails, we're going to go back down to 390. November beans, down 4 cents, traded as low as 10.05. Again, a 7 cent range, a high of 11, a low of 5. Chicago wheat, despite making new contract lows yesterday, we were a little bit higher last night, a penny higher overnight. Kansas City up a quarter cent. But the bottom line, that story has not changed. You have wheat fighting for its life here at contract lows. If you are storing wheat, you really need to at least put some sort of a floor under there. I've been working with clients, for the last week or so, and they're concerned. Of course, who wouldn't be? We're at the bottom of a. Got to remember, back in June, we were $1 higher, so that was kind of the last train out. So now that we're testing $5, guys have called up and said, "Well, what's the risk now?" If you go back and look at the old charts, it's 50 cents to $1. I mean, that's the risk. So yeah, there's still something worth protecting. I'm not promising that we're going to break $1. I hope we don't. But if you're trying to figure out what the risk is, you have to go back and look at what the old lows are, and that should determine how much money you spend on a protective hedge. You don't want to spend 50 cents to protect $1. You don't want to spend, I can't imagine spending more than 10 to 20 cents to protect $1 downside risk. But maximum would be 25 cents. So that's what we're looking at here on this Tuesday morning. Switching over to the cattle, we were sharply higher yesterday. It's going to come back down to, what we've been dealing with for the past 10 months. Are we going to make another new high? Sure felt like it yesterday. These fat cattle went vertical, highest price we've had since September 2nd. So called a 3-week high. If you look at December fat cattle, if we take out 243.50, that opens the door to 250. Can't believe I'm saying that. I can remember when protecting 80 cents was considered a good hedge years ago, 15 years ago. So just amazing to see what cattle continues to do. October feeders finished up 7.25. That's correct, 7.25, and another $10 trading range. Every day in cattle, you're going to have a $10 trading range now. It seems like, right? Every other day, very, very common. So the level to watch for October feeders. Are we going to take out that contract high, 369.30? If we do, that opens up the door to 375. Then you've got people writing in Time magazine, saying, $4 cattle, here we come. It's just incredible. There's nothing more I can say about it. I mean, fundamentals, cash, packers, cattle on feed. The border is remaining closed because of the screw worm, and that's putting pressure on supplies. I mean, the supply's too tight, and the American consumer just keeps going out and buying $10 steaks like it's nobody's business. Um, it's actually pulled up the hogs as well. Hogs finished up higher yesterday. The level I've watched today in December hogs would be 89.50. That's the old contract high, 89.60. If that opens up, then we're going to be talking about these cattle possibly trading up towards the buck. So it's a good time to be long cattle, a bad time to be long corn and beans. This is Chris Robinson, Robinson Ag Marketing. If you're looking for help with your hedges, if you want a specific hedge, if you don't want a cookie cutter, if you want somebody to spend some time with you and say, hey, what's your risk? What keeps you up at night? Give me a call. I can possibly help you. 312-638-8868. Have a great rest of the day, and we'll talk to you this afternoon.